Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. A bounce back day for the markets after President Trump paused tariffs on automakers for a month, and the White House signaled it could be open to other compromises. We're going to dive into the rest of the day's market trends. Then just days ago, Varda Space Industries completed a historic reentry in Australia. I'm going to talk to one of the company's co-founders about that accomplishment. Plus, we're going to speak with former congressman and host of the Yahoo Finance podcast, Warrior Money. That would be Patrick Murphy, about his big takeaways from President Trump's address to Congress Tuesday night. Well, it was a big moment for Varda Space Industries. For the second time, the startup launched a capsule into space aboard a SpaceX rocket, and then after 6 weeks in orbit, landed and retrieved it last week. This was the first commercial spacecraft to land in Australia. That was a milestone for the company and the broader commercial space industry. Varda has raised $145 million from A-list investors like Founders Fund, Coastal Ventures, and Lux Capital. And joining us now is Delian Asparouhov, Varda Space Industries co-founder and president. Delian, it is great to see you on the show. I want to start here with Varda Space Industries. Delian, for the uninitiated, here's how I understand what you do. What you all do is you take material from Earth, you bring it up into space, you get to work, you modify it, manipulate it, you heat, cool, and mix it, and then you bring it back down to Earth and put it to use. How am I doing?
Pretty darn good. You don't even need me on the show. You should just pitch it yourself. But yeah, that idea isn't one that, sort of is uniquely Varda's. There were papers even from the, sort of mid 1950s that theorized about this, sort of potential material benefit of microgravity. There was even, sort of former NASA administrator Bill Nelson, a photo of him on the space shuttle back in the day doing a protein crystallization experiment. And then probably the biggest inflection point for the field was in 2019, Merck published a data set on one of their blockbuster cancer compounds, Keytruda. Last year, that did about $25 billion in revenue for them. Financial analysts estimate that it represents about a third of their $300 billion market cap. They basically showed that they significantly improved the quality of that compound in the microgravity environment. And so my sort of thinking in 2019 was, hey, there's some workhorse, sort of rockets nowadays that are making access to space much easier. The Falcon 9 from SpaceX, Rocket Lab's Electron. Somebody needs to go take this and commercialize it. And so what you're seeing here on the screen are basically our reentry pods that when they're finished with those pharmaceutical materials that we produce, bringing those back down. We did that for the second time ever, sort of successfully just last week, landing in Australia, and we have 3 more, sort of coming up this year, all of which will be landing in Australia.
And Delian, why target drug development specifically?
It's, when you think about the limitation of space, it's how much mass you can, sort of bring up there and bring back down. And so there have been a variety of studies on, sort of semiconductors, metal alloys, sort of human organs. So we do think that there are a broad set of use cases over time. But in the short term, when you think about the active ingredient in pharmaceuticals, it's by far the most expensive, sort of material that you have on the entire planet per unit kilogram. And for now, while Starship is, sort of still in R&D, there are other rockets coming online, you're still limited by how much you can bring up there. And so for now, pharmaceuticals, at least for the next decade of our work, is going to be where we really focus in, given that that's where we find that the unit economics really close.
And why are we sure, Delian? I mean, you must be sure, you started the company, but why are we sure that you could take this material up in space, you can you manipulate it, modify it, and then we know we can bring that back down here, and you can scale that material, mass manufacture it in a conventional factory?
Depends on the use case, but realistically, in the next, sort of 5 years for the drugs that we're working on, you'd actually have to do that, sort of mass manufacturing in space. But when you think about mass manufacturing, this isn't something that's like the size of a city block that needs to be up there. Sort of take that blockbuster, sort of case study that I mentioned that Merck published in 2019, Keytruda. If we needed to today mass manufacture that product up in space, it isn't something where it's like we need 15 starships or anything like that. We can actually do that currently sized capsule that you just saw us land in Australia last week and basically just fly one of those per month. And so it's not some insane sort of expectation on the company. We're flying 4 times this year, 6 times next year. If we need to fly 12 times to sort of bring that product to market, we absolutely could do so. Now Merck had that result in 2019. They ended up deciding to go with a different sort of technological technological approach to enabling that benefit. Basically, what they showed in microgravity was they could take this cancer drug from something that would require a 4 to 6 hour intravenous drip, and instead they can provide a subcutaneous basically injection. Think of it as like a syringe that you can pick up from your pharmacy. They ended up deciding to go in a sort of different direction to sort of satisfy that problem. So it's not to say we would go commercialize that particular drug, but we have a bunch of drugs in our pipeline that we're working on that have pretty sort of similar characteristics where we would have that same benefit from space, and looking to commercialize that realistically first clinical trials in 2027 and sort of first commercial sales 28. So we still got a long path ahead of us.
And Delian, you talked about how in-space manufacturing, it's been talked about for a long time. What changed, Delian, so it became a much more viable business opportunity? How did this become just cheaper and easier to get done?
Yeah, if you think about like the historical ways that any sort of business makes money in space on the commercial side, obviously plenty of sort of government opportunities. But when it comes down to the commercial side, basically until sort of Varta came into life, there's really only two ways of making money. It was internet, which is what sort of Starlink and things like Viasat do, and taking sort of photos of the Earth. Think Maxar, Planet Labs are example publicly traded sort of names that do that. Those business models don't require nearly as much, sort of launch capacity, and are more, sort of able to hit unit economics even in the days before Falcon 9 became reusable. But in 2019, I basically noticed that a Falcon 9 rocket had launched and landed 4 times in a row, and it was clear to me that that was going to flow through the rest of the supply chain and the ecosystem, such that your cost to orbit was much cheaper, but then also your flexibility on when to go up. So to give you a sense, this past sort of for the first sort of 2 months of 2025. There's basically been a Falcon 9 or other orbital rocket that has launched and landed once every 24 hours. And so the ability to just go up to space effectively whenever you want now is significantly improved, even compared to 2019, where it was on the order of once every 2 weeks or so. And so that to me was the clear trend of, okay, there are other business models that can now be enabled that aren't just internet and taking photos. The clear next step was take materials and manipulate them up there and bring it back down. But, there's, as you continue to play this out, I do think that you're going to start to see, things like lunar ice mining, asteroid mining, and these further out ideas start to become viable towards the end of the decade as well. We just think that in-space manufacturing is the much easier one to start with.
Delian, I want to switch gears a bit here, get your thoughts. Elon Musk and the Doge boys, they're serious about cutting, Delian. Reportedly, they are looking into where they're reviewing NASA. Given that you work, in the industry, I'm just curious, Delian, do you have line of sight there? Do you look at NASA and say, yes, okay, there is bloat and waste and just inefficiency we could be addressing?
I'm really excited by, sort of Jared Isaacman being the incoming, sort of NASA admin. He's somebody that both is a phenomenal businessman with, his prior payments company that he built, Shift4, as well as the fact that, he's clearly put, his neck on the line, right? He was the first ever private astronaut to go and do, sort of a spacewalk. So when I think about somebody at the helm that, really understands and has a, sort of true passion for space and what it means to make sure that we, sort of beat the Chinese to the moon, beat the Chinese to Mars, I think we've got, sort of a great leader in that, sort of visionary sense. But then also in terms of really understanding, sort of the ROI and business side of things. I do think that there are, sort of areas of, sort of bloat where there are certain programs that I think are really well structured. I'll give you my favorite example that, is very relevant this week, the Commercial Lunar Payload Services Program. It's what enabled the recent lunar landing mission that just happened about, 48 hours ago. It was the first ever American successful lunar landing since the, sort of Apollo era. There's some phenomenal 4K footage that I highly encourage your viewers, to go look up. The way that program was structured wasn't NASA saying you need to build the vehicle in this way, with these specific requirements. Instead, they basically said, look, here's our fixed price. We will pay this amount for delivery to the lunar surface. If you can do it cheaper than that, great. As cheap as you could do it, that's all your margin. We're not going to tell you exactly, sort of how to do it. And so I find programs like that where, sort of NASA's the, let's say first buyer in a market really, really exciting. When NASA is really focused on the deep space robotic programs, think, they have a helicopter that's operating on Mars. That's never going to be something that a private company is going to do in the short term. Those types of programs, I'd really love to see, sort of NASA leaning into. When it comes to funding programs where there's like cheaper commercial alternatives that are already available effectively off the shelf today, that's where, I think there's some bloat that, so NASA could, let's say shift to some of these programs that I think have a lot of promise and a ton of ROI for the country.
Delian, great to have you on the show today. Thanks so much for your time. Appreciate it.
Thank you so much for having me, Jeff. Have a great rest of your day.
U.S. stocks closing higher as Trump pauses Canada and Mexico auto tariffs. The S&P 500 rising over 1% in today's session. And Yahoo Finance's very own Josh Schafer joins us now with the trading day takeaways. Josh.
Hey, Josh. Yeah, we're going to zoom in on those tariffs to start because that was really our market catalyst today. So stocks had been negative in negative territory. Stocks shifted a little bit to positive territory. But we really saw liftoff after the White House said that they'd be giving that 1 month exemption to the three major automakers on those Canada and Mexico tariffs. So what I'm going to pull up here for us, Josh, is just simply what we saw, of course, in names like Ford and in names like GM. You would expect to see this, right? We're seeing a 1 month exemption in those tariffs. Of course, investors reacting positively to that news. But what's interesting to me is when you zoom out here and you think about perhaps what the market read was to some extent on the S&P 500 overall, which I'm not going to get to on this screen, so we're going to go back to where we were. But the S&P 500 really took liftoff during that hour, or the final few hours that we had in the trading session. What I think, Josh, that sort of speaks to is a broader theme that we've seen among companies. So this is data from Bloomberg looking at mentions of tariffs on S&P 500 calls. I mean, I don't really need to say much about the numbers here. Look at the bars.
Yeah.
It has absolutely taken off. So many companies are talking about tariffs. It's a risk to a multitude of sectors. So if people feel like these tariffs might be a negotiating tool, that's been when we get a little bit of a market rally, relief rally.
So tariffs, threats of tariffs, how are sort of market strategists, how are they thinking through this in terms of, is it meaningfully impacting, Josh, their forecast, their expectations for EPS growth?
Yeah, it was interesting. So we were talking to Citi equity strategist Drew Pettit, who is one of the strategists that puts together the S&P 500 year-end target, right? And he said right now, it's too uncertain to include in that target. They can't change their target because they're not sure how long tariffs are going to be implemented.
Right.
But what he said was, if tariffs were implemented for 3 months, that would shave off $3 of EPS for every 3 months that tariffs are implemented. What that really means is eventually it would weigh on the index, right? If we're weighing on earnings, then usually that would weigh on index performance, but it would probably take tariffs and the full extent of tariffs. Remember, we just talked about one exemption. It would take that full extent of tariffs for an extended period of time. So that's why right now, I hate to use the phrase wait and see, but it does feel like a lot of wait and see from a macro perspective, at least.
All right, Josh Schafer, bullet point number 2.
More weak economic data this morning, Josh. So data from the private sector showing private payrolls. This is data from ADP. The private sector only added 77,000 jobs. You can see that's one of the lower numbers we've seen over the last couple years here. And really this just being another data point that's showing a little bit of stumbling in terms of the economy. Of course, this comes ahead of the jobs report on Friday, but markets did take a little bit of a leg lower this morning. This was pre-tariff news.
Because it was well below consensus.
Well below consensus. It was well off last month. This was the largest 1 month drop we've seen in over a year.
Did you see that, Josh, say yes, how does that basically square with the other economic data you've been watching?
Yeah, so it certainly showed slowing, right? And then I posed that question to ADP's chief economist, Neela Richardson, who breaks down this data for us reporters right after it comes out. And she said what's interesting is if you looked inside this 77,000, the weakness was in areas like retail, areas that are exposed to the consumer. And so you're starting to see signs of a consumer slowdown, right? Because retail sales were weak in January. So if we're spending less at those stores, then those companies are less likely to hire, right? So you're starting to see a little bit of an inclination that the consumer is slowing down. That would be a key concern moving forward later into 2025. If that continues.
All right, Josh, appreciate it. Stick around, much more Ask for a Trend. That's right on the other side. President Donald Trump giving a speech to a joint session of Congress on Tuesday. Trump hit a wide range of topics, including military recruitment, saying that the U.S. Army had its single best recruiting month in 15 years. For more, we're bringing in Patrick Murphy, former congressman, host of Yahoo Finance's Warrior Money podcast. Patrick, it is always great to see you. I do want to start there, Patrick. So President Trump, joint session of Congress last night, talking about the military. He emphasized that military recruiting is up, said, I am pleased to report that in January, the U.S. Army had its single best recruiting month in 15 years, and that all armed services are having among the best recruiting results ever in the history of our services. What do you make of that, Patrick? What do you chalk it up to?
Listen, I'm an American first before you're Democrat, Republican, Independent, and I think it's great news. We hit recruitment goals for the first time in 5 years this past year. and that trend line is continuing where young Americans are joining our forces. That is a very, very positive thing, and that's great for our national defense.
Do you think, Patrick, our Secretary of Defense, Pete Hegseth, and I know you know him, can he help out in that recruitment effort, do you think?
No doubt. Listen, even when the commander-in-chief last night says, hey, this young kid who's going to now go to West Point, that was a very touching moment for us that are watching. But yeah, when you have Pete Hegseth as Secretary of Defense out there working out with troops, et cetera, that's what I did when I was, helping run the Army. That's a positive sign. That shows that you are leading from the front. And I think people are drawn to that, yes.
Sticking with Trump, again, another topic he brought up last night. I want to get your thoughts on that. Talking all things military. He said the United States will pursue a golden dome, Patrick. And I guess this sounds like something similar to Israel's Iron Dome defense system. Trump saying Israel has it, other places have it, and the United States should have it too. What do you make of that, Patrick?
Listen, we got to do everything we can to make sure that we keep our families safe. And so whether it's the Golden Dome or the Iron Dome, I think we know that we have to use technology to do what we can to keep our families safe. I will say, though, as a veteran, there wasn't any comments from the president last night even talking about veterans. He didn't mention veterans or veteran issues. He did talk, though, 6 times about the Panama Canal, talked about Greenland. We're going to get it one way or the other. So that was concerning, but we'll see how it shakes out. But listen, the reality of it is the solemn duty of our government is to keep our families safe. Josh, you know that. I know that. And we need to make sure that that continues to be the case in Washington, D.C.
Patrick, always great to see you and have you on the show. Thank you, sir.
Thank you, brother.
And be sure to scan the QR code below to check out Patrick every Friday at 12:30 p.m. Eastern. It's on the Yahoo Finance podcast, Warrior Money. Here's a clip from one of the latest episodes.
The thing I learned in the Marine Corps was 2 things. Most of all was responsibility, the importance of responsibility, and the significance of having discipline in order to get there. That, you didn't have to want to do it. You didn't have to like doing it, but you had to do it. And then, those things led to, I had a, right to be proud of everything that I did in the Marine Corps and later on in my life. So, the very important things, very intangible, could be applied in any business or any pursuit. But that's what the Marine Corps taught me.
For our chart of the day, we're looking at expectations for business costs from regional surveys in New York and New Jersey. Yahoo Finance's Julie Hyman joining me now with a closer look. Julie.
Hey, Josh. Yeah, this was some information that was making the rounds of economists today as we try to suss out where the future path of inflation is. Well, the New York Fed regularly surveys businesses in the region about what they're expecting. Are their costs going to go up? Are they going to raise prices for consumers? And of course, all of that is now more fraught in this moment because inflation has not really decelerated. It's kind of stalled out. And of course, because many businesses are now facing tariffs. So here is what they found. So they categorized them into services firms and manufacturing firms. And the survey work was done. The survey period was February 3rd to 12th. So while certainly tariffs were being discussed and that 10% tariff against China had already gone into effect. So what they found was this, and you could look at the past years and what these companies saw in terms of their costs. The cost increases year over year, peaking in 2022 for both manufacturing in green and services in white, and then decelerating to some extent in 23 and 24. But then in 2025, it looks like we see a tick up again. On average, says the New York Fed, these services firms expect costs to rise at a 5.7% pace, manufacturing to rise to 7.3%. So both of them seeing sort of this re-acceleration. Is that then going to feed into the prices that they're charging customers? It looks like yes, according to the survey. The price increases to about 5% among services firms and to about 5.4% for manufacturing firms. So this is how it could feed through. And they also, the New York Fed found, 82% of the services firms and 86% of manufacturing firms reported that they used imported goods in some way, imported goods or services in their businesses. So that's why the tariffs might affect them and how it might affect them. So just sort of, again, this is survey data. It's not necessarily what is going to happen, but it is just yet another piece of evidence that shows us what could be the effects in the short term from some of these tariffs, Josh.
Thank you, Julie. Let's take a look at what's trending after hours here. First up, Marvell Technology is plunging, with investors telling the company its Q4 results were good, but not good enough. The company reporting Q4 earnings in line with street estimates, including slight beats on revenue, sales, and adjusted EPS, continues a recent trend of Wall Street holding AI names to a high standard. Next up, MongoDB, the software company, also dropping after earnings, offering revenue guidance just below street estimates, delivered a fourth quarter beat on both revenue and adjusted EPS. And shares of Zscaler, they're rising as the company tops second quarter estimates on the top and bottom lines. The company also lifting its full year profit outlook, beating Wall Street's expectations. Additionally, Zscaler's third quarter earnings forecast also topping analyst estimates. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.